Yeah. So as I've been talking about for a while, I think we're in that transition from macro crypto spring into macro crypto summer. Now, people confuse it with the actual season itself. I just saw that on Twitter. I'm like, no. It's because it breaks down to 4 periods of the liquidity cycle that drives assets. So the transition here is usually when the forces are still disinflationary and growth is slow to picking up. That is like macro utopia. Why? Because that tends to push the central banks into adding liquidity and the governments to adding liquidity. It also happens to be this everything code cycle is also about the election cycle. And guess what politicians do at this time as well? They want to give candy to the kids. So they're stimulating as well and tend to stimulate into the following year as well.
Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, this week Raoul Pal discusses his exponential age thesis. Raoul will dive deep into why liquidity will resurge into H2 2024, why diversification is dead, financial repression, the fourth turning, and how all these factors impact markets.
So that particular juncture of the macro starting to pick up, the ISM survey is still below 50, so it's still sluggish. The forward-looking indicators are all very positive, and liquidity has been positive for a while. That pickup, if you think of it, we've had a Wall Street recovery, which is liquidity. Main Street recovery is yet to happen. Main Street is when earnings go up, and all of our earnings go up, and there's a bit more money around. That's when the flows from all of these earnings start going into markets as well. So it's not just liquidity and debasement driving things. It gets driven by actual investment money, which has been actually quite lacking in many respects. So that's typical of the crypto summer. So the crypto summer starts around now. It also forms the basis of the banana zone. And that's when things start to get really crazy. If we go back and look at all of these, since about 2008, they've all done roughly the same thing, which is presidential election cycle. It kind of has a sell-off into the summer, then it tends to accelerate sideways over the election because everyone doesn't know what it means, and then it's all over, markets rip. Whatever the outcome, the shock, expected result doesn't matter. And so that election cycle has been very prevalent both in equities and in crypto. So that's where we are in the cycle now. So we're just in that zone of, we've got this beautiful chart pattern that is just consolidating. The stuff that has less network traction or network adoption has fallen significantly, but we're starting to see the recovery. So I think it's only a matter of time now before we start to see the next move. And that's also likely to coincide with some other liquidity things. I think the Japanese have to intervene with the blessing of the Fed, because that's going to help the Chinese, the Japanese, everybody's business cycle. That has to come because the US dollar is far too strong for this point in the cycle. The other thing that needs to happen alongside that is the Fed absolutely have to cut. And I saw you talking on Twitter today. Look, inflation, the true inflation numbers are 1.82. Core inflation, core CPIs is now headed lower sharply, but rates are at 5.5. It makes no sense considering the lag that it has. If not, they're going to undershoot inflation, which I don't think they mind, because you can refi debt at lower levels because they put everything at the short end right now. Janet Yellen's been issuing short end debt, so the lower she gets rates down, the more she can get back into the 4-year cycle.
The price of Bitcoin briefly dipped as low as $57,874 on Coinbase on July 4, the first time the asset has fallen below the $58,000 mark in more than 2 months. Bitcoin's slump comes as millions of dollars worth of leveraged long positions were wiped out, hurting traders hoping for a Bitcoin price gain. More than $54.9 million in Bitcoin long positions have been liquidated in the last 24 hours, according to data from CoinGlass. Similarly, traders looking to gain long exposure to Ethereum ahead of the launch of several spot Ethereum ETF, expected as soon as mid-July, also saw their positions wiped. In total, $57.9 million in Ethereum long positions were liquidated in the last 24 hours. Much of the blame for the wider pullback in the price of Bitcoin has been laid at the feet of the defunct Japanese crypto exchange McGox, which is scheduled to begin repayments of approximately $8.5 billion worth of BTC to its creditors beginning in early July. However, some analysts believe the repayments may not be as dire for Bitcoin as others believe. Meanwhile, mentions of buy the dip have skyrocketed across social media in the last 2 days, with the use of the phrase doubling across Reddit, X, and 4chan in the same time frame.
What we've got here is a global utility, which is blockchain, much like the internet was. Now, unlike any of these global utility networks, trains, road systems, all of this, you couldn't invest in them. But because this is tokenized, you've got a behavioral incentive system to grow the network, which is the more people come onto the network, the more the number go up, the more people come on the network. And therefore, the more capital in the network, the more applications get built, the more the network gets used, right? It's fucking genius. And we've never seen anything like this, where we're all part of it. So here we've got this asset class, which is a globally homogenous asset, which doesn't exist. Gold is the only one. But gold, if you go to a village in India, the bid-offer spread is 50%. Here we've got tradable on a mobile phone in India, the Philippines, Fiji, New York, Vancouver, the Cayman Islands, the same thing. And it happens to be the infrastructure layer to the internet for the system, for value and storage. And, it's that distributed database, which is a public service utility good. Okay, brilliant. It's a $2.5 trillion market cap today. If we just extrapolate out the trend rate of growth, it gets to $100 trillion by about 2032. Okay, so this is the biggest wealth generating opportunity in all human history. So you've got this in front of you, which is this whole, how to unfuck my future. Part of it is this. The other thing is don't fuck this up. Never get thrown off this horse, because this is the big one. It's the greatest macro gift of all time to get everybody out of this shit that they're in. So it's there in front of you. So then people are like, yeah, but what do I invest in? I'm like, okay, listen, de-chill all the noise. There's a bunch of decentralized businesses that sell block space. And they all have different types of block space. One's going, hey, mine's the most secure and the oldest. Somebody else is like, well, mine's the internet computer. And somebody's like, mine's the internet computer, but faster. They're just selling block space. So there's a bunch of companies selling block space or applications on top of that block space. That's all the space is. It's just a technology and it's an adoption. So our job within this is now not get philosophical and tribal about where do I invest in that technology and screw it up. Our job is to maximize the opportunity to the best we can. And that's a balance of how do you take risk? Because a lot of people go, max 10 risk. Like, no.
Yeah.
Look, if it's going for 2.5 trillion to 100 trillion, you don't need to take max risk. You can just capture the bulk and then do a bit of the tail on the side.
Yeah.
Is BTC a safe haven? Some observers maintain that crypto is, or is on the verge of becoming, an uncorrelated financial asset, which means that when stocks and bonds plummet, crypto won't necessarily sink as well. But such thinking could be wishful. Crypto has shown to be massively procyclical so far, notes Tasca, and you wouldn't expect anything to be different in 2024. The academic literature doesn't support the notion that BTC is a safe haven. If stocks go down and monetary or fiscal policy becomes more restrictive, I expect crypto to go down too. In the event of a sell-off, crypto would join TradFi assets in a sharp decline as these are bundled together in the initial shock. Lucas Keeley, Chief Investment Officer of digital wealth platform YieldApp, tells Magazine. But BTC could recover quicker due to its flight to quality nature, relative to other crypto assets. Cryptocurrencies may not have completely detached from or become anti-cyclic with the rest of the risk-on category. Mark Fleury, CEO and co-founder of 2Prime, a financial technology company that focuses on the financial application of crypto to the real economy, tells Magazine, but it has proven in the past cycle that it can sometimes function as a safe haven. When Silicon Valley Bank collapsed in March 2023, the second-largest bank failure in U.S. history, global stock markets trembled. But BTC, contrary to some expectations, rallied, Fleury recounts. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.